Good morning, everyone. Oh, these guys are just making us work, aren't they? Good morning, good afternoon. What's up, I am listening. That was a pretty big candle. Now, here's the thing. Do I start another balance zone up here, or do I just keep expanding these ones? I think I'll just keep expanding these. Almost got it to the top of 8 times cost basis. So cost basis this morning, was down here at 24 quarter to 27 and 3 quarters. Double it to 35, double it again to 49, double it to 76 and 3 quarters. Yeah, it looks like it's going to settle back in. We did fill the single prints. Oh, look, we caught a bid. Yay. Hey, all right, what's going on? So let's get to it. Welcome, everybody, to our Wednesday, the 11th RT8 session. And in keeping with this whacked out crazy market, more distribution now above yesterday's high. Let's see if we open on a gap or not. As you can see, ladies and gentlemen, ever since the War of the Roses, when Archie and Edith had their little tiff, we are in distribution now higher. So let me just go and get rid of the night sessions. That's what we're looking at. We did a look above and fail of 65 and 3 quarters. That's a big level for me. 64 is on my candle wax chart on the weekly. So let's see if we look above and fail and we get some liquidation, or we come back down. The green rectangle on the TPO chart was the single prints, which are now gone. And Maxime is asking, what do I think about the treasury market, especially the 10-year note? I must admit, I have no clue. I don't know anything about the treasury market. You might as well ask a golden retriever. I have no clue. I don't watch bond markets. I don't watch the treasuries. I don't watch any of that stuff. Ever since I got into this retail thing, I have had to really, really focus. Right? Bonne journée. Bonne journée. Yeah, I'll never try and lie to you guys and say I know what I'm talking about when I don't know. There are a lot of other people who are much more learned in that aspect of bonds. Uh, reach out to them. But I am really just focused on quick in and out trades, also some position trading for larger clients. showing people how to hold trades longer is what we're going to be working on this summer. Hey, Redbeard, welcome to the room. And we've got some pinned messages here. Let's hope they haven't erased mine. Here you go. There's a video, Redbeard, that'll help. And feel free to ask questions anytime. I've found out for myself in this whole retail trading journey that I really had to like focus on making money. And for me, that means I had to really limit the amount of information that I take in. So for me, my whole thing is to find the bid. In this case, the bid pre-market is at 60.52, right? Because there's that move up, there's the backfill down to the bid, and then back up again. Yeah, it looks like we've got a little rotation, right? My whole thing is to find the bid. How much has the market maker arena changed since you were in on it? Uh, Kind of like horse and buggy to spaceship. You guys got to remember, I started in 1993. So the wholesale business, Bo Hunter, has changed massively, right? Electronic trading, algorithms, technology has replaced drunk market makers, right? It's made the business. In the time it took us to do one or two manual trades, you guys can now, they can execute 300 trades. They're efficient, right? You don't have to bail them out of jail at 3 in the morning. Algos are great. You know, you don't have to put them in rehab. They show up for work every morning. So the business has changed massively in the efficiency of the delivery of product. The business has not changed at all in market making. Right? The business is still the same. It has just gotten insanely more efficient. Just like any business that you take and apply technology to. Exactly. And the trades on stocks are free, which means how do they make their money now, William? They make their money on assets under management and management fees. So we've gone away from a commission-based revenue generation model in U.S. capital markets to a fee-based assets under management revenue model. Yeah, you would call your broker to place the order, right? Your broker would call me, the trader. I would call the market maker. Now, we've taken all those 3 steps and reduced it to milliseconds. Pretty amazing stuff. So if we're to open here, we're going to open on a gap. Really wasn't expecting another gap today, but why not? Right? We have a bunch of unfilled gaps underneath us. Why not, eh? What the hell? People don't know what it was like before the internet. No kidding. My first level 2 software, Bow Hunter, was you had to actually hit enter to manually refresh the level 2. So we'd wear out mice and keyboards by just hitting enter. Enter, enter, enter. Oh, man. Brave new world. It's a brave new world. And that software was 1500 US a month. Dow Jones Telerate with static level 2. Didn't even have dynamic level 2, and it was 1500 a month. Hey, I used to charge 3.5% on the dollar value of the trade. My ticket charge was $25. Back then, finance people were like supermodels. We don't get out of bed for less than 10 grand a day. That's all changed. So we're going to open on a gap. If we open above yesterday's high, indicate a little change in business. We really need some liquidation. I keep saying that every day as this thing keeps creeping higher. Let's see if we get any kind of inventory correction at all. Now, next week we're going to roll over the contract, right? Go to the September contract. I've actually never looked at a USD GPY chart. Oh. Oh, excuse me. Okay, so we're set up and ready to go. Can you go over how the market will not go down? Sure. I'm sure everybody's tired of hearing it, Travis, but I'll go over it again. Ever since we had Trump Judgment Day, right? And we had this nonsense all the way down, right? We came off the highs, came all the way down to 4,800, right? And then, of course, he changed his mind. So we have a gap here. We have another gap here. Now, these are the short positions that you can see that are obvious, right? So the obvious short positions are here, 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 right? Those are the three obvious short positions. Within these time frames, there are short positions that are not so obvious, unless you're a keen observer of market structure. So, but the problem is, right, the swing traders, right, they're not going to sell this market until we start taking out some swing lows. And we're nowhere near that. So there's no reason to sell, right? That's number one. Number two, right, this market is performance based, right? So it's in everybody's incentive. What they basically did was they shook everybody out of the market who was long, right? They took all of their product, they reset the cost basis, and now we're in distribution again. Look familiar? Because the same thing happened after COVID. It's the exact same playbook. You flush out margin traders who can't pay for their stock in cash, right? You know, I've been saying we need some sort of normality in this market since before COVID, Hank. That's the problem. We're not getting any. So I think weird is the new normal, right? That's why I think it's very, very important for retail traders, right? Right? That's why it's really, really important. What happens when everybody gets flushed out? The big money buys it, just like a car lot, Mark. Same thing. I'm just going to type this. So if the business at hand does not meet our terms and conditions to do business, they don't get our money. Real simple. Now, of course, it's easier said than done, right? Because prices jumping around, and you're sitting there going, I've been sitting in front of this screen for 2 hours and I haven't made any money. It's frustrating, right? But don't get frustrated. That's how they get you, right? Coming from the other side, I'll tell you guys something. When you're scared, when you're angry, when you're frustrated, it's like taking candy from a baby, okay? Uh, Agatha, yeah, I could explain that, but it's really it doesn't make any sense anymore because T plus 13 T plus 13 was in Canada and that was 30 years ago. So it's kind of like stock market history. What I will do is one of these days, if you guys are interested, I'll do like a YouTube or a webinar where you guys can ask questions and I could talk about the history of some of the stuff that we used to do. And it's more for like colorful, but it's not really going to help you make any money, right? What we really need to do is trust our chart and trust our setup. That's how we're going to make money and come out of this mess, right? I'd love to talk about that stuff. I'm an old guy, so old guys love talking about the past. But then I'll get carried away and you guys won't actually get any usable advice. Like I could teach you how to manipulate a stock. That hasn't changed. But it's not really going to help you because a lot of you won't have access to a stock to manipulate. Right? And I'll probably get into trouble for that. I mean, I've got a lot of crazy stories. The only time I'll use those stories is try and illustrate what we're doing or what's going on in the business, you know? And only if it's helpful so you guys. Yeah, I've Hey, listen, I'm no stranger to a Wells notice, Bo Hunter. It's no fun at all, and the only people who make money are the lawyers at $2 grand an hour. Hey, Cryptomania, how you doing? Now, before we start, gonna plug the room a little bit here. Okay? So, if you're enjoying the stream and you want to keep it free, please consider joining the Trading Syndicate. This is where I teach and trade live every day. You get direct access to me and other pros. We collaborate on trades, answer all your questions, and help you work through your trading issues in a practical manner. Right? We've got a discount in the description. It's about 50 cents a day. You can do it month to month, so you can cancel any time. And you can learn how to get fully funded with our friends at Apex Trading. Their discount code is in the description. Please check it out. And I will guarantee you that you give me a month, I'll teach you in a month more than you'll learn in 10 years anywhere else. Hell, I'll even teach you how to hide a short position in Switzerland for a year if you want. But all right, let's see if we can come back down, take out the 60-52s. You see, everybody's short under that 60-50. So every time we come down to yesterday's high, that's when we get that responsive bid back up. What do I think about the CPI results today? They helped create a nice short position under 60-50. Other than that, like I was saying earlier before you joined, hey Ron, how are you? Uh, Before you joined, I was saying how I'm not really a macro guy. I don't know how to interpret macro results. So I let the chart tell me everything. Right? Really, I put all my faith in the chart because the chart is the current business transactions happening now. And interpreting that chart allows me to either make money or not make money. But I can't tell you what the CPI is going to do. I can't tell you what tariff things are going to do. None of that is in my purview. So my job is to help you guys not blow up your accounts, not lose money, learn how to make money in a practical, simple manner that you can replicate every day and that you can scale as you get experience. Right? So everything that I do has to be practical. Like right now, is it a good time for me to take a trade? No. Right? What would I be looking for? I'd be looking for a look below of 48 and fail. Right? And what I do is I'll let everybody else short it down to see if we get a gap fill. If we can't get a gap fill, you go long for the trip back up. Those are kind of practical trades that I like, right? I trade inventory and I trade order flow. So the size participants trade from a long, they're always long and selling, right? That's what a wholesaler does. So right now, they see that people are willing to pay 56, but not 57. So they'll price their product at 56 to move as much inventory out the door as possible. Hey, Patty Lou, how you doing? So my big thing is when that business meets the terms and conditions, right, that I do business under, and this is it right here for me, when that happens, that's when I execute. When this is going on, I'll just leave it the hell alone, right? Yeah, I still have not gone to a soccer game. I know. They call it football. I know, okay. Listen, I grew up in the prairies. It's not football unless there's blood and broken bones involved. But they do love their soccer here. They really do. So we're going to open on a gap. We got a minute left. Now, the problem with market profile is a beautiful thing, but it's hard to trade because the distance between the stops is 10 points. So that's a bit different. So if you are trading this, right, let me call out some trades. Say you're going to short on the open. Well, if we can't take out 52, you're not going to get a gap fill, right? And if you're long, your first real target is up in this 60 area here because that's where they sold here, 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 and here, and front ran here. So those are your basic trades off the open, right? When the market opens up on a gap, for me, what that means is there's a change in business. We're opening outside the previous day's range of business. So that means there's change. Now, does that change continue? Is it accepted? Hey, look, hit the open. See, there's that 52. Let's see if we fill the gap. See, look at that. Right down to 52. Found a bid. Boom. Right because the stops are there. Now let's see if we break it on the way down again. Broke it by 2 ticks. Let's see if we get a gap fill. Come on. I'm looking for a look below 48 and 3/4 and back up. I might not get it, so I'm prepared to just chill and wait. So when a market opens on a gap, I like to watch it for a while. Right? Here we go. 2 ticks. Come on. Gap is filled. Okay? Short 49, 46 and a quarter cover on one. If we accept under VWAP, look for 42 down here. I did not see the look below and fail. That's why I did the 49 short. There's 42, right? We said 42. Why? Because we're front running the close. That's why I call out these levels. Because I expect buying at the close. I expect a little front running before it. I saw a seller there, Knapshuck. If we hadn't filled the gap, maybe a long. But if we had done a look below and fail. But I saw it come in and I saw aggressive selling. Now, let's see. Now I'm looking for the seller. There's a seller at 48. And they stop selling when it bids VWAP. A little choppy here. Little size at VWAP. That's why the point of control is right here. I'm short biased. I'm not in a short trade, but I am short biased. My short bias ends if we get back over 48. But at VWAP, I'm going to let the large traders work that out. If you are shorting underneath VWAP, right? If it starts taking out that 48, I scalped. I tried to hit 44 on the short. I missed it. Now let's see if we could tag the close of yesterday. Uh, 44 against like 45 and a half. Yeah, just against VWAP as a scalp, but I missed it. I was too slow. That happens, right? You're gonna miss trades all the time. It's not the end of the world. Now, here's when we start creeping above VWAP. Right? We can't take out the close. It's a bit of a clue. Right? It's a bit of a clue. If we build a little position here between 41 and 46, we should be able to take it and pop it and sell it between 48 and 49. And if it starts getting under 43, you know you're in trouble. And remember, those of you who are position traders, trading size, right? Manage your risk with size. Hey, Marky, thank you. That looks good. There's going to be a seller at 48, right? So if you're long in the 44s, make sure you pay yourself, right? Try and sell it a little bit before 48. Front run the bastards. There you go. Right? Always want to front run. A little bit of chop. Right? There's a little bit of dancing back and forth. Right? Last couple of days, I wasn't feeling really good. And also, I wasn't disciplined. More than not feeling good, I wasn't disciplined. Okay, if we get over 49, look for sellers at 51 and a half. Today, I'm finally got the discipline back a little bit. Had to work on it for 2, 3 days. Because I took those 4 days off. When I came back, I was like that guy in Remo Williams would say, I was moving like pregnant yak. Right? I was not quick. Right? Buy 49. No, no. I was saying sell before 49. Right? So I was moving a little slow, missing trades, not taking trades. A lot of lack of discipline. How do you find sellers? They're right here. See this little red line that keeps moving up and down on my 1 minute chart? Here, let me get rid of the VWAP study. See that red line? Those are the sellers. When the red line moves down, that's when the sellers are initiating and competing. When the red line moves up, it means the sellers have seen buyers and are getting greedy and raising price. It's beautiful. It's on most trading software. It doesn't cost anything. The other my big thing is, can we get normal people who've never worked in a brokerage firm to treat this like a small business, right? Trade and make money without having to spend the mother load on fancy software and stuff. Right? You should be able to trade off a 1 minute candle chart. Right? You shouldn't need all this stuff to trade. Coming up to 51. Let's see if we can hold 48 and 3/4. And the old guys who taught me how to trade, they used a golf pencil, a piece of paper, and a 15-minute delayed ticker. So would you guys be able to trade if all you had no computer, you saw a price every 15 minutes, and your trading tools were a golf pencil and a pad of paper. Think about it. Because that's how it happened for hundreds of years before. Really, before the mid 90s. It would make you a better trader. See, that gap in the ES futures is supposed to be a tick. If it gets bigger than a tick, there's a bit of an anomaly in the order flow, right? In equities, it's a completely different situation. Equities don't have a standardized spread. And the spread in a stock tells you a lot about how the stock is trading. Watching the time and sales in a stock and watching the spread get bigger, smaller, that tells me so much. That's why I don't watch time and sales in futures, because they simplified it so you don't have to, right? All you got to do is watch your levels, right? But if you're trading stock, right, I love watching time and sales because it like tells a story. The time and sales in an equity tell you, hey, is there an offshore seller, right? Is there, are they price improving? It tells you all sorts of stuff by the prints. It's quite beautiful. Are they backfilling? Are they backfilling with a give up, which means offshore seller? Do they backfill all at once or do they backfill continuous? Right? All of those things are different, but that doesn't apply to futures trading, which is good because it's less to think about. Sellers at 48 still. Right? Remember, we did trap quite a few poor souls up above 49, right? Like we got all these poor people trapped, and they're just falling out into bids here, right? They're all just falling out into this bid, right? It's like, one of the really good traders on YouTube. I think he's retired now, Don Miller. This is like a catcher's mitt. Pop fly into the catcher's mitt, right? Liquidating retail into wholesale hands. Back into the retail flow for profit. Let's see. If we hold this thing up here, we'll bring in enough buying to do this, right? That's why I'm watching that A low against the close. Oh. See, I don't trust that close yet. I would have much preferred if we had done one of these. But when it stops right before a level, that kind of gives me the willies. Buyers and 45, sellers and 49. Yes, exactly, Redbeard. If you want to scalp between 45 and 49, that's our current rotation. Nice. Sometimes I get so fixated on a level that I'll forget the business that's going on, and it's a good thing Redbeard just reminded me that. Come on, come on. Stop teasing us. Hit that 40 and a half. Come on, you dirty tramp. Stop teasing. There we go. Now let's see who comes into the kitchen. Oh, taking that 39 stop. If we get under 38, look for 34 and a half, 35. It's not ready for the catcher's mitt yet, Raj. Yeah, we are still distributing, Ron. Good call. And the VPOC did not move up. You're right. Good call. Really good observations. Your time off has made you much sharper. That's good. My time off made me slow-witted. Your time off was good. Oh. Now, what did I miss? I missed this. I missed the look above and fail. And if Moran is around, she would remind me that that's 2 days in a row that I've missed that trade. She must be babysitting. Yep, there she is. So still got to work on the old discipline there, JJ. Right? Back to the middle of the zone at 41 and 3/4. So what I'm doing now is I'm looking for where the sellers are going to step in. They stepped in here, here, here. So the logical place would be right there is where the seller is going to step in. Anybody use a 30-second chart? I remember I tried using it about a year ago and then I stopped using it. I can't remember why. Maybe it was just too much to look at. 15. Oh, okay. I think 15 would require too much caffeine. I'll give it a shot though. I always try to see things differently, you know? The trick to this for me is not to become an old fuddy-duddy and be open to change if it works. Now, VWAP is right there. Ooh, went right through it. Good for Globex. Too busy for RTH. Oh, excuse me. Nice long, Taco. Nice long. It was another gap and trap, ladies and gentlemen. Right? Gapped it, trapped a bunch of people long, sold into it. Great way to move paper. Well, it's not paper anymore, but jeez. Now, can we get accepted above yesterday's high? That's my next question. So we did a look below the close and fail. I should have been long 42. just on TPO. Looks like there's a seller just before 48 and 3/4. If we get accepted above 60.50 and we take out these sellers, look for a little move back up to today's open. Now it's trying. Let's see if those sellers step in at 51. Nope, front ran it. See if those sellers are still there at 51. If they see buyers, they'll raise their offers. What's my best movie of all time? For markets, The Wheeler Dealers. James Garner. 1964. If you want to learn about the stock market, watch The Wheeler Dealers. 1964. Tells you how to do a deal right from the get-go. It's like an instruction manual on how to make money in the stock market. Now let's see if we can get a look below and fail of 48 and 3/4. There we go. Not a look below. Tagged 48 and 3/4. Just watching the offer here. Creeping back over 48 and 3/4. Right. Long a little bit at 49. Hitting it out at 50, 51, 50 and 3/4. Trailing my stop up. Got one left offered at 2/4. Flat. Look below and fail. So long, stop, target, sell the balance. Okay, brain is working. And that's my ride or die trade. Right. The sell orders, what's the business reason for the trade? The sell orders that take us under 48 and 3/4 are finished. No need to sell under 49 anymore. I buy 49. If it breaks 49, my business reason for the trade doesn't exist. Where do I sell it? Where they sold before at 51. And if I can get any more than 51 on a couple extra, fine. Couple of points here, a couple of points there. Pay the bills. What I'm trying to determine is maybe a smaller time frame chart in a choppy market more useful for determining the exactness of the look below and fail. Now, I might be going down the rabbit hole a little too much. So it wouldn't be the first time I've done it. Yeah, there you go, Napshark. Cool. Explore the 5 second. I need too much Red Bull for that stuff. That's too much. I think 15, 30 second is enough for me. This 30 seconds not bad. I'm testing it out on another screen. Not hating it. Gotta tell you. Okay, what's next? Raj was right, man. This is a long A period. These half-hour bars are. Oh. I swear to God, before this presidency's over, I'm not going to have any hair left. Like, nothing's happened this week yet, right? But we're all kind of nervous. Who's going to say what? Let's see if we get back under 48 and three quarters. If we do, look for 46, 47 bids. See if Tesla can stay over 328. That's my big level for it. That was a hell of a flush, folks. Scandalous. Scandalous. Okay, there's B period. I don't trust that B low. I'm just saying. Just saying I don't trust the B low yet. I'd like it to get tested. If that B low holds at 49 and a half, you're long till 55. There's going to be seller at 53. So we're going to have to creep past that seller. Hey, Corey, is that Corey from the beginning? Back from the original group? Holy cow, man. Corey was one of my first supporters before I even started the trading room. Good to see you, brother. Wow, it's been a long time. Definitely. Corey was working with me. I was trying to teach Corey long before I knew how to teach. Okay, remember what I said. If we clear that 53 seller, I'd be like, yeah, okay, Corey, they're going to shake the tree now, do a little crazy Ivan. JJ, what are you talking about? Oh, you know what I mean. Right. I wasn't exactly the best teacher back then. Oh, man. Good to see you, brother. It's okay. I was a bad teacher. I just thought everybody understood what inventory was, and you know, I thought all this stuff was just common knowledge. The crazy Ivan. The next time you hear that reference, Jeff, hopefully we'll be doing it. Now we're in distribution, folks. Right? So if you want to try and scalp 48 to 52 back and forth, that's really the business right now. Not much going on. Right? Apologies, write your congressman. Ask for better order flow. I miss doing the crazy Ivan. That was a great technique to move to get people short. Hey, Eric, what's up? Seems to be holding the 48s. Little rotations up to 51, 52. I wonder if it's going to be choppy all week. Maybe even more choppy as we go into this contract rollover. What's the new contract volume? Is there anything significant yet? 26,000 contracts. Nothing significant yet. So, do you see how the point of control is down here? Right? That's what they're doing is they're selling this up here. Right? This was the liquidating volume, remember? That was the liquidating volume into wholesale hands, right? Sold back into the retail flow for profit. LC, what's going on? Choppy rotations, choppy rotations. Which basically means wait for the next move. Chill out and wait, right? Stay loose, you know? Yeah, exactly. As LC says, waiting for the sellers to compete or waiting for more buyers to come into Walmart, right? It's one or the other. In that time, grab yourself a coffee, chill out, relax. Don't be all hunched over. Just sit back. If you miss a quick trade, don't worry, you'll always get another one, right? I don't think you've ever said what your view of like FX, like currency markets. I don't know anything about it. I mean, Bretton Woods and all that stuff. I had a buddy of mine back in the 90s who was a currency trader for Bank of Tokyo Mitsubishi. And he was in Japan at the time. All I remember is he barely slept 2 or 3 hours every night. And he had monitors in his bathroom, his bedroom. That's all I really know about currency markets. And those guys trade massive size. And anytime, any day, a central bank can come in and ruin your day. I don't trade currencies retail. I have no idea. I have run currency charts using this balance and all of that stuff, and it does work. So that much I know. But the mechanics of the currency market, I know nothing about. The only thing I know about currency is what I read in Education of a Speculator from Victor Niederhofer. I'm a person who has to focus to do something well. That's just me. That's why I just zone in on ES. Right. So I get to know it really well. Like right now, I know not to mess around with it. So I guess that was a nice look below and fail of 48 and three quarter. Let's see if we can get it up to 52. It's like forced buying, right? Nobody really wants to buy it. But because since we're over yesterday's high, your longer term target, I mean more than minutes, is up here at 55 half, which is the open of business. If we take out that A high, the next logical target would be 51 and three quarter, which is the W high where the next set of stops are. Here we go. You're going to go march that inventory up. Come on. Oh, close. Right now, they're just front running the close. And there's not enough buyers to warrant raising prices over 54 just yet. Now we're going to put it on sale, bring it back down under 52 quarter, right? Found some buyers. Let's see if we can get them to march. Come on. Are they going to follow us like little lambs up to 54? Here we go. Whipping and driving them. Nice and gentle so we don't scare them away. Here we go. There's 54. Can we get a 54 quarter print? Not just yet. Back down to entice. Down under 53. Oh, there's a buyer at 53. There's 54. Quarter print. Yep. Come on. Print. Print, you dirty rat. Nope. Not yet. Back down to entice more buyers. Found some. That's what that offer moving back and forth is, that we have multiple people trying to entice buyers at the same time. And they're competing against each other. Right? That's why you get chop. And because of electronic trading and the whole algorithm thing, it's very, very quick and very efficient. NQ. My NQ charts aren't that great. I've got a target of 22,488 on NQ. We're not there yet. And my NQ TPO chart once again, look at that. It's just one time framing higher, right? We got a seller right here at 54. So if you look at NQ, there's your cost basis. And look at this, right? Higher lows, right? The market is chasing the sellers up. The sellers are positioned here, right? Oh, look, we got a quarter print. One. Some poor soul bought it at a quarter. Today my rectangles are 3.5 points because that was the range of the market at the time I took them. Sometimes my balance zones will be 5 points. It all depends on the range of where I acquire that balance. G Dallas. I do not touch NQ. I don't trade NQ as a retail trader. I don't. The only thing I trade is the ES. It's a market I know, and it's a market. And I'll say this with the most humility. It is the market where I can lose the least money if I screw up. That's why I like ES. Because it moves slow enough that there's a business reason for my trade. And also, I don't like trading thin markets, Adam. I don't like trading a market where you drop a 300 contract order and moves the price 20 points. I don't like that. NQ is too thin for me. But I'm 57 and I'm old. Now, if I was 24, I might trade NQ, right? For the action. You know, it's like in the old days, you get on a motorcycle and you max it out to see how fast it goes. And now you just kind of putt around town, right? I like boring markets. Mind you, ES hasn't really been boring lately. Not with a 500-point range last month in one day. We do have people in our room at the trading syndicate who do trade NQ. They have, and they've earned their profitability. Their profitability. A lot of them have taken some pretty ugly cuts and bruises. See you, Taco. Have a good one. So yeah, once again, folks, it doesn't matter what you trade. We have people like we had a commodities guy from Goldman, right? And he teaches in our room. And now if you're, younger and you're into those NFTs and sports betting and all that stuff, we've got Ray in our room who really knows that stuff well, right? It's like having one of those old gangsters from Vegas who know the lines on every football game, baseball game. Ray's like that. He's got all that stuff clocked. I have no idea how they do it. Remember what I said? Over the open, targets 61 and a half. And my big number that I'm looking at, ladies and gentlemen, is 60, 65 and 3/4 to the upside. How about live cattle? I have no idea what cattle futures are doing. Not a clue, William. Not a clue. I haven't even. I don't even. I don't think I even get those quotes. Does it really? Yeah, I don't really have I don't have a lot to do with cows. You know, trading them, being around them, bull riding. Right. I've got buddies of mine who do that rodeo because I grew up in the sticks. Right. I have no desire to get on a 2,000 pound bull. No, thank you. How is the coin of bitterness? There's that dude on the internet who says it's never going to get over 12,000 because of Elliott and his waves. Yeah, no thanks, Hank. I've got buddies of mine who are cowboys. I put them in the same category as hockey goalies. They're a little few sandwiches shy of a picnic to get on a bull. No, thank you. Right? Same heart, and a lot of the guys who do rodeo, they do play hockey and they are goalies, so they're a little nuts. As we're creeping, right? This is how the market gets you, ladies and gentlemen. This is how they get you. They do this slow, creepy price action, and it's not on purpose. It's just the nature of business right now is lending to this slow, creepy price action, and then all of a sudden, it's like a drunk guy climbing the stairs. He slips and falls, but he gets back up. And he slips and falls, and he gets back up. And it induces shorting. And that's what helps push price up later when the shorts realize that they've got to go cover. Right? Yeah, I kind of actually, that's what I look at NQ trading as. For me, for NQ trading is like bull riding. I think I'm just too old to get tossed around. Yeah, sometimes he gets up, but lately he's just been making it, you know? He's been making it. I think that's what the price action, I don't think a lot of traders understand, and even larger traders, they mistake this slow, creepy price action for weak, right? And I've noticed that on my trades, unless it's like off the open and stuff like that, like the look below and fails and those kind of trades, I've noticed that I've got to be a bit more patient and let the trade work a little bit more than I'm used to. So I've been getting out of trades early because I expect them to complete, and then they kind of stumble around and go like, I would have bought, say, I bought 54, right? As soon as it got to 56, 57, I'd be out. But it stumbles its way up to 59, and I haven't been waiting for that. Yeah, the worst sentence in retail trading is there's no way it can go higher. That's when you start saying there's no way you can go higher, put in your mouthpiece and get ready for impact. You know? Oh my goodness. See, this is the thing. So if you're not long and you're watching, I know it's kind of boring, but when you see candles come to the same bottom at the same price on like a 1 minute or even whatever time frame, that's where the bid is. So the bid was here, it moved up here. There's no reason to short it. We're still in the front end of this move, right? You want to let the market complete the front end of the move and then let the sellers come in and tell you that they're selling by lowering the offer. They've gotten us since the dawn of time. Trapping short is the front end of the move. And it doesn't matter if it's a manipulated market by a human or whether it's because of human nature, the way we trade, right? So we're looking for sellers just here. A quote that always stays with me, number one, is never pay for stock. Number two, zero cost paper always finds the bid. Those are the two phrases I've lived by. One is never pay for stock, and number two is that zero cost paper always finds the bid. And those terms are more apropos in deals, not trading. I think in trading, the one quote, and it's not from a trading movie, it's from Scarface, is number one, never underestimate the other guy's greed. And that actually also works in deals as well. And number two, for short sellers, don't get high on your own supply. Wait till there's a seller before you short. Don't short because of an imaginary someone's going to sell. Wait till you see that seller and then initiate. Nice trade, Hank. Well done. Beautiful. 55 to 60. I'll take that all day long. See if we hit some resistance at 61. What I like to do, Mark, is I like to have my sell orders in. So if I was long, if I was long 56, 57, and I know that there's a seller at 61 and a half, I'll be out just before 61. Right? I know that seller is there at 61 half. Right? Because they were there before. Why wouldn't they be there again? Right? So if I'm long 57 or 56, now if I have a larger position than 3 to 5 contracts, like I did on the last one, I had 2 extra contracts, I'd sell into this. But as soon as I'm long and I put my stop in, I put my sell orders in. So the market takes me out as it goes up, right? That way I'm not fumbling around. So long stop, and then you put your, as soon as you get executed on your long, you put your sell orders in. What's above 65? I got 60.98 and a half. It just grinds, eh? It's, yeah. It's just, it's like grinding up the shorts and using them for fuel. And the more people short it, the higher it grinds. I want to see this level get tested in RTH. I'm very curious. Exactly. And you know why slow doesn't mean weak now, Hank? Because the business is sporadic and it's coming in electronically. So you don't get that emotional movement in the candles, which makes it look kind of weak, right? Nice trade, Taco. Beautiful. Beautiful, beautiful. 60.65 is a level I derived from back in the COVID days. And my original balance zone, if you look at the earlier video that we did this morning, uh, my balance zone was 2745 to I think 2900, and I doubled it and I kept using these levels because really it's the same inventory. That's all we're doing is just taking this, put it on discount, sell it. It's over and over and over and over again. Right? The business never changes. So the levels still work because they're just cost basis levels. And we are going to have some single prints when the next period opens up. So it's going to show you where your short position is, right? So this green box shows you where the shorts are trapped. No, no, no. So we ran this up, Mark. We want to try and keep selling at these highest prices for as long as we can. We want to milk this. When you have a short position in a market, when you have people who are trapped, you want to take as much advantage of them as you possibly can. It's a moral imperative, right? In finance, when you know someone's in trouble, right, you're morally bound to take advantage of it. Right? That's the rule of finance, right? So if you know that people are trapped short under 60, every time you get to 60, you stop selling. And you make them chase it up higher, right? And you just keep doing that as long as they keep falling for it. And if you hold price stable, then FOMO longs will come in, and then we'll get up to 65, right? So if you know people are short under 60, all you do is if you're a size trader is you stop selling at 60. And now because it's done electronically, it's insanely efficient, right? You don't actually have to do anything. It's all programmed. Beautiful, right? You know, it's like those 3-in-1 kitchen instruments. It slices, it dices, right? It runs stops, right? It senses order flow, right? That's what happens when you pay millions of dollars to the 0-in-1 mafia to create your software. So now we're backfilling, and I'd be looking for bids here at 56 because that's where they're really trapped, under that A high. Oh, I've gone over. Sorry, guys. Oops. Have a great day. Trade smart out there. Come join us at thetradingsyndicate.org. and DM me anytime if you need help. Thank you, everyone. Much appreciated. Bye for now.